Hello traders, Mark Chapman here, the creator of the trademark Trap Traders concepts. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is Wednesday the 24th of May 2017, and would you believe it, we've got another multiple structure failure location setting up. These traps are like buses. There's none for ages and then all of a sudden they all turn up at once. So what's a multiple structure failure trap? Well, we talked about it yesterday, and in essence what they are is that someone might say, oh well, that's just the level of resistance. It is resistance because people are trapped, and you could obviously describe these areas as resistance too, but it misses the point, and it doesn't change the fact that these are areas where you would imagine price to get stuck. And I'm going to talk you through a little bit more depth beyond just saying, oh well, it's a level of resistance. A multiple structure failure trap is where you have a market that is directional. So in this case, the market had been heading up. Price puts in a new high usually, and then it falls away, and then it attempts to go back to that high, and then it doesn't quite make it, and then it attempts to go back to that high, that prior high, and it doesn't quite make that high either, and it attempts to go up, and again it doesn't make. So what you have is you have this cascading effect. Okay, now what you need is this cascading effect to happen within that locality without it being too wide, because if the area is too wide, so for instance if this distance to the start of these multiple structure failures is deep, it makes it very difficult to be accurate to say, oh well, I need to sell, you know, I'm going to sell here, for instance, right? It's more difficult. You're like, well, whereabouts am I going to sell within that whole structure? If it's wide and whippy, you don't want that. You want these levels to be very close to each other. So then you can define that area, and that's your risk. And then what you're doing from there is you're watching for price to fail, and then you can sell it. The euro against the US dollar, I don't buy the strength. I think the euro strength is a little bit dislocated from the reality, and fundamentally we still want to be buying dollars. So this is just bringing dollars to us, making them more cheap. So this is a multiple structure failure trap, because every time traders went long on those pullbacks, they got caught as the market dropped off, and then it attempts it again and they got caught, and then it attempts it again, they get caught, and there's trap volume up there. Now if those people were buyers, then and they get trapped, and imagine they were down in here and they've been holding those positions all that time, you know, they're gonna bail out, and the only way they can do that is by selling. So that's going to create an area of supply, obviously. And there are other traps in there. This is a huge trap, this candle, etc. So you'd expect to see some supply in here. We haven't seen a great deal so far, but there is a little bit. But it's this area up here I'm most interested in. And yes, you could describe that as just multiple layers of resistance. But what is a trap in its basic sort of form? Its essence is a level of support or resistance. It's just not one that's usually described, because you're marking them up in places where people get trapped. So for instance, as an example, you know, there's a trap there, right? But in no book would you hear anybody saying, oh well, that's a well-defined level of support, right? But it's a trap, so you'd expect to see some demand there, etc., etc. So traps are supply and demand, obviously, but the reality of it, they don't present themselves in a way that is described in any other format of technical analysis. Completely different. This is probably the closest you could get to having an argument that, you know, that's just an area of resistance that's built up. You know, you can definitely have that argument too, but it's just a plus in the plus column. In this example, in no other type of trap, but in this example you can, but this is not me against support and resistance. This is just me saying that this is an area where there's people trapped, and it happens to be a big build-up of what people would describe as resistance. That doesn't matter. I don't care so long as it turns, right? The rationale is there more supply than demand in that area? Would you logically think that to be the case? And if that's the case, then obviously you'll take the trade. I'm just taking the trades coming from a perspective of those traders being trapped, and what would their behavior be if they were in those trades and they never quite managed to sort of make any money and then it went against them. You know, their motivation's very different. If you're a trader down here and you've been buying up in here and you found yourself down in here, you know, your motivation's very different to the person you were when you first originally took the trade. You were hoping it would follow through. And when it gets back over here, you're super motivated in terms of you're going to bail out, and that's going to create supply. So if you'd like to come and join me in my inner circle, tonight is the time to come and join us, because we've got our weekly coaching call. Click on the link below. If you like this content, make sure you share it with your trading buddies. I'm sure you've all got trading pals and friends. Share the content, share the love, and I'll see you on the inside.